Putin has helped the stock market go higher. And how come tech stocks are rising and BHP and CSL show and tell? What do they tell us? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Well, Paul, I'm choking here, so you better take this over. Putin has helped the stock market. How come?
Well, you know, a little bit of withdrawal, maybe. Who knows what's going on really in Ukraine or on the borders there. Yeah. Look, I mean, I still don't know what Putin's game plan is. I don't think anybody does, Pete. No. And so does he really want to invade? I don't know. Is he getting all the attention he craves from the West? Yes. Yep. He's winning that game pretty well.
Yeah, and I think that the leadership in Ukraine is probably being told by even the West, talk to this so-and-so and try and come to some kind of agreement because we don't want to go to war and we don't want to lose our gas.
Yeah. So look, you're going to watch this. The market's going to, go up and down on the back of it. Largely, it has a bigger effect on Europe, obviously, than it does in the US. It's really, as far as the US is concerned, it's a little bit around the oil price, but they're largely self-sufficient too, Pete. So it's sort of, I think the market's sort of overreacting a little bit, but these things happen.
So Paul, I think it's interesting that it does show that the negativity around recently is inflation, it's interest rates, and Ukraine was an issue. And if you're a fund manager, you know that the day war starts, that market's going to fall. So they go very defensive, and therefore growth type stocks get sold off.
Yeah, it probably has a bigger impact about just how whether it drags China into it, and that's really I think what the US fund managers is more concerned about. Not about Russia per se. I think they're really concerned about the US and China and just what happens there as a result. So look, when you're in a sort of the bad news cycle, more bad news drives bad news, and so markets on edge. But look, we'll get through that. But some exciting times ahead for a little bit longer, making it harder to get really too confident about our market, notwithstanding reporting season.
And volatility is extraordinary at the moment. And one thing that surprised me, like this morning's story was Ukraine-Russia tensions go down, bond yields go up, and NASDAQ was up a lot. Tech stocks were being bought. What in the hell's going on there?
Well, have they all forgotten about interest rates, right?
Oh, looks like it.
There's nothing like the hip pocket, right? I mean, and look, we know it's partly a rotation. I mean, this whole thing with bond yields and tech stocks and growth stocks, it's been a bit of a furphy, right? It's an excuse.
But, they believe it.
But they got valuations too stretched, right? Yeah. So they believe it. So don't be surprised that some of these big tech stocks, not like Australia, they're not, companies like Microsoft, Apple, Amazon, they've got truckloads of cash, right? Yeah. They're very profitable companies.
And they're not really tech stocks.
They're not really tech stocks.
They're real companies.
They're real companies, right? So don't be surprised that when they get sold off, people want to go back into that. And so they're getting the rally here, a little bit flowing back into Australia, but we've come off a lot more than the US, notwithstanding the fact that they're the home of tech, right?
Yeah.
So,
but it's fair to probably say, Paul, when you look at the more risky tech stocks in America, like Square, which is now called Block, it's had a big fall, and it's more like our tech stocks have fallen. Interesting one, Paul, I think the real buying opportunity in the tech space here is Xero. I think Xero's gone down a real lot. I think once normality comes around again and the economies of the world are booming, Xero's going to be a beneficiary, I think.
Yeah. Moving on to other stocks.
Yes.
BHP yesterday, it's a massive beat, Pete. I mean,
wasn't it?
And look, a very upbeat forecast around commodity prices. Now, by one warning, BHP has been so wrong in the past sometimes about his outlook.
But this is a new CFO,
a new CFO,
David Lamont. I interviewed him yesterday. So, he's on Thursday's show.
Yeah, so look, I won't bag him too much. No. But look, if you're not long BHP, you've got to stay long BHP, right? This is a resources boom, right? Global growth is strong, right? All the BHP's in the right sort of commodities. China's going to get back onto line.
They've got a positive view on China growth, haven't
Positive view on China. BHP is now the biggest stock in the index. The more it goes up, the more the weight in the index, the more the passive funds have to keep buying it. This if you're not long BHP, you've got rocks in your head. So even if, not saying you rush out and buy it today, but use dips to buy BHP. It's going a lot higher. That's my big tip for the year, right?
He's a BHP man. And he's a mining man.
Look at the numbers yesterday. I mean, BHP, and my only caveat about BHP is let's hope it doesn't do an acquisition. If it does an acquisition...
Well, I asked him that, and he didn't give us any strong indication. But I don't think they're completely shutting the door.
No, they shouldn't shut the door on that. But an acquisition, I could change my mind, right?
On the subject of acquisition, CSL reported...
I just want to go to BHP, just complete the story, yesterday's dividend, I mean, it's yielding over 8%. And this was a half in which the iron ore price fell, right?
Yeah.
So the yield is fantastic, right?
Yeah.
And as long as they don't do anything stupid, it's going to be there. So look,
but Ian, you and I in the past have said you never buy mining stocks for yield, but at the moment it actually has worked, hasn't it?
It has worked. So, and CSL today, look, it's an inline result. Look, there's nothing new in what CSL said today. It's reported online. It's reconfirmed guidance. It hasn't done the usual CSL trick of overperforming. So I guess that's probably a little hard because of the acquisition in December. They had to come out with a statement. They had 5.5 months of data, so it's pretty hard to tell too big a lie between December and February.
Yeah.
I mean a lie, you can't embellish the story. So I guess that's why it's in line. Interesting to see how the market takes it. I mean, it's not enough to get excited about, but CSL's come off. It's been in that sort of high growth stocks, compression of multiples. I still think you just hang on to CSL, right?
Yeah.
And look, maybe you nibble more today and keep some firepower there. But look, there's nothing bad in the result. It's just that it's not gonna.
Yeah.
It's
Well, Paul,
it's not a showstopper.
The brilliant question is this: if they hadn't announced an acquisition, do you think CSL share price would be slightly higher?
Look, I think it would. I think it is getting caught up in the whole multiple bond yields type stuff.
Yeah.
And so healthcare, if you look at the US, it's not the best performing stock. We know it's not the best performing sector here. The Australian story market is about resources and banks.
Yeah.
Right, and when they're going high, other sectors get left behind a bit.
But the history of sectors to do well over the last decade, healthcare has been really good.
Yeah.
So I think punting to healthcare one day, as we approach normality, when there's no more virus threats, when economies are growing, I bet your healthcare comes back, and that's when I want to be on CSL.
Yeah, and so that's why I'd be buying it too. And the last thing I'd say is you've got to say reporting season's going pretty well, Pete. So there aren't too many negative surprises. So
with all the Omicron stuff out there and Deltas, we're still going okay.
It's back to the races. You've got to say this is the roaring 20s, right? We think, and we hope. Maybe we're smoking something this morning, folks.
Maybe let's hope we avoid a depression at the end of it. That's I'm Peter Switzer.
I'm Paul Rickard.
and we really screwed up the end, and we're mad about money.